Good evening. This is eNCA Moneyline, your money guide. My name is Sikim Kabadeli. Coming up on the show tonight. The country's power utility has been downgraded to junk status. 95 new electronic locomotives added to the Transnet fleet. And thousands of businesses in Johannesburg will be forced to now pay for their outdoor advertising and billboards. But first, your top stories. It's lights out for Eskom's credit rating. The parastatal has been downgraded to junk status by Standard & Poor's. The news comes after Eskom announced the suspension of its top brass, including CEO Tshediso Matuna. The Eskom crisis continues to hurt consumers and business, with rolling power cuts a reality. Standard & Poor's now rates Eskom as a BB+ with a negative outlook. This is from a BBB- rating. S&P will be releasing its credit rating for South Africa in June. To unpack this more, I'm joined on the line by Nedbank economist Isaac Matshego. Isaac, thanks for your time this evening. Is this really a surprise?
Well, Siki, I'll say to you, the downgrade is not a surprise, but the timing caught us a bit off guard. I mean, with the problems that we know have been ongoing at Eskom, the liquidity shortage and all that. I mean, it was positive that in the budget we had that the government will inject about 23 billion into Eskom, but this seems to not have sort of given the international investors, and in this case, the rating agency, confidence. And S&P states quite clearly in its statement that the recent suspension of the executive management was sort of the event that triggered this downgrade in junk status.
What does this mean for the prospects in the borrowing market? They already told us when Moody's downgraded them last year in November that this would push their financing costs up by between 30 and 40%. So what's the status of Eskom's balance sheet?
Absolutely. It simply means that the interest rate that Eskom is going to be charged when it borrows internationally is going to be higher. I can't quantify, the extent by which the interest costs are going to go up by, but definitely Eskom is going to sort of have to dig a lot deeper in order to be able to raise international capital. And the statement actually said that, there is a risk that Eskom might not meet its financing needs. This simply means that either government is going to have to sort of advance more liquidity to Eskom, or it's going to have to get sharply higher tariff increases from NERSA.
And what is the likelihood of government injecting more liquidity into Eskom at this point?
Well, the government will be forced, to bail out Eskom some more should the need arise, I must state. And I suspect that, what we're going to see going forward will be a combination of more liquidity from the state and also higher tariff increases.
All right, we'll leave it there. Thanks for your time. Economist at Nedbank, Isaac Matshego.